Yeah, look, the market was, it's been range bound for the last few weeks. I mean, a month back we were at about 81,000 points. We are now at ballpark about 78,000 points, which is where we seem to be consolidating. On a macro level, I mean, there's a reason why the market is sort of range bound. I would say that a lot of the triggers that we were anticipating will pan out this year seem to have already come into play. Elections approaching the IMF, interest rates, the easing cycle commencing, all of those things have already come into play. And I think the market is looking for fresh triggers. Now, whether this comes from, a surprise cut in interest rates larger than expected in the next monetary policy, whether it is, maybe talks with the IMF or maybe an add-on program with respect to a climate finance facility, or, with respect to success on privatization. So I think market is looking for new triggers. There's been a whole host of triggers that have already played out this year, and now the market is searching for more. So yes, of course. I mean, in the absence of those triggers, it's a range-bound market, and the stocks are and investors are responding to sector and stock-specific developments. So whether it is the onset of results, you will find that that drives investor interest in stocks. So result season has commenced, and then there's sector-specific news flow. So the power sector seems to be in the wars. Everybody seems to be getting after the capacity payments and the electricity bills issue. So naturally, there has been pressure on the power sector stocks of late, and then the cement stocks have also responded. Firstly to additional royalties being placed on the use of limestone in Punjab, and then a stay order coming through, and we hear that there is talk of a further increase in cement prices. So there are sector-specific developments that have impacted the market this week, positive for some, negative for some. But overall, they've offset each other, and the index has remained in a very tight and narrow band. Yeah, I think that's a reasonable assessment. Obviously, the IMF, the finance minister has guided for conclusion of the IMF program by the end of the month. So it is expected that somewhere around that time, the IMF executive board will take up Pakistan's request for a new facility. So the staff level agreement has already been agreed. And our understanding is that usually, we haven't seen that otherwise. Usually, the executive board approval is a formality. So yes, the market won't treat it as a surprise, but certainly it is an important checkpoint, because it promises to give you that macroeconomic stability, or the framework for macroeconomic stability for the next few years. The next monetary policy is also on the 12th of September. And given the recent inflation numbers, there is a possibility we could see a decent rate cut, which again is something that the market looks at. And something that is probably relevant for next month, and maybe not so much after that, is the FTSE rebalancing, which affects passive inflow or outflow from the foreign side. And that is probably an event that will be important for the second half of September 2024. But yeah, I mean, other than these checkpoints, I would imagine that unless something untoward happens that we're not anticipating, I think it's reasonable to expect that the index will remain in a narrow range in the near term.